Welcome to The Explainer, where we're breaking down a massive, record-setting quarter from one of Canada's biggest banks.
So let's just start with the headline number, shall we? RBC just posted a staggering $5.4 billion profit. That's in a single quarter. We're going to dig into how they pulled that off and what it really means for everyone else.
All right, here's how we'll break it down. We'll start with those eye-popping numbers. Then we'll look under the hood to see what's really driving the growth. After that, we'll talk about the risks on the horizon, hear the game plan from the top, and finally, wrap it up with why any of this matters to you.
Okay, let's get into it. The main story here is just, wow. We're talking about significant record-setting growth pretty much across the board.
The numbers really do speak for themselves. Both their net income and their earnings per share shot up by 21% compared to last year. That huge surge in profit pushed the return on equity to over 17%. You know, that's a key metric that shows just how incredibly efficient they are at making money for their shareholders.
So, the big question is, where did all this horsepower come from? Let's pop the hood and take a look at the different parts of the bank that really powered this thing forward.
First up is the part of the bank most of us know, personal and commercial banking. I mean, this is the division that serves millions of us every single day. And it was a huge part of the story. Its income grew by a pretty remarkable 22%. And a huge reason for that? Well, it was you, the Canadian consumer. The CEO, David McKay, pointed out that people are still out there spending money, not just on the must-haves, but on things like travel too. And all of that activity, well, it's basically jet fuel for this division.
But it wasn't just everyday banking. The capital markets division, that's the arm that deals with the big corporate clients, had what the CEO himself called truly exceptional results. Just look at this. They brought in a record $3.8 billion in revenue. That was fueled by a huge surge in client activity, both in advising on deals and in trading. It all translated into some seriously strong core earnings, which really shows you the raw power of that part of the business.
And to round it all out, the performance from the wealth management side of the business was just as strong, posting some really impressive double-digit growth of its own.
Over here, net income jumped 15%. Now that came from a couple of places. First, the markets have been rising, which lifts up the value of everybody's investments. And second, they saw a really healthy flow of brand new money coming in from clients, not just in Canada, but in the US and their global businesses too.
Okay, but it's not all smooth sailing from here. For all this amazing performance, the bank's leadership is also being pretty clear, signaling some caution about a few risks that are definitely on the radar.
Yeah, CEO David McKay really laid it out. He basically said, look, things are good for markets right now, but that's being tested by all the geopolitical risk and trade uncertainty out there. It's a real tug of war.
And these aren't just some vague, far-off problems. We're talking about things that could create a real domino effect. You know, trade tensions could hit consumer confidence, which could squeeze company profits, and that could lead to higher inflation or a weaker job market. This is the stuff that management is watching like a hawk.
So, faced with all that uncertainty, what's RBC's game plan? Well, the message from the top is pretty straightforward. They believe they're operating from a position of serious strength. And they're not just saying that, they're actually backing it up with a really key number, one that acts like a financial safety net for the whole bank if the economy hits a rough patch.
It's called the Common Equity Tier 1 ratio, or CET1 for short. The easiest way to think about it is like a financial cushion for a rainy day. RBC's is sitting at a super robust 13.2%. which is way above what regulators require. It gives them this powerful buffer to absorb any potential hits down the road.
And this right here, this gets to the heart of their whole strategy for dealing with uncertainty. Their business is incredibly diversified. It's spread out across different kinds of banking and in different countries. It's like the old saying, they haven't put all their eggs in one basket, so they aren't totally dependent on one thing going right to succeed. All right, so we've gone through all the numbers, we've talked about the strategy. What's the big picture here? Let's tie it all together and figure out the main takeaways from this whole thing.
When you boil it all down, this earnings report is really telling two different stories at the same time. On the one hand, you've got the bull case, incredible profits, tons of momentum, and a business that's built to last. But on the other hand, you've got the bear case, a clear-eyed warning that all these external risks could really throw a wrench in things.
And that really leaves us with the million-dollar, or in this case, billion-dollar question for anyone watching RBC. Is all this incredible momentum strong enough to just power right through those global headwinds? Or are we looking at the peak of the mountain right before a potential storm rolls in? That, right there, is the big question.